get to our experts and ask them how seriously we should take today's resistance to the 200-day moving average, or whether we should take the bounce up a little more seriously. Mitesh, that question to you.
User Satya Prakash has sent us a question on Titan. He's got 500 shares of Titan. He's paid 430 rupees each. I mean, the price is almost 900. He says he can hold the stock for up to 2 years, wants to know the long-term prospects. He's already doing very well. Mayuresh, what would you tell him?
Afternoon, Prashant. I think with everything that has been happening in the gems and jewelry space, Titan has held up more in terms of the pedigree of the management. And again, the large expectations as the management put forth, specifically in the jewelry business, even if one assumes a 22 to 25% growth, along with studded jewelry having a very reasonable share, the margins that they reported in the quarter gone by on a consolidated level at 9.9% should show an upward tick. Having said that, again, the grammage sales were again on the higher side, as well as their other business model in terms of fast track and the watches segment actually on the EBIT front did quite well. So on the EBIT front, I think the margins should hold up. Their Golden Harvest scheme is doing extremely well. The franchise-based model and the rollouts should augment its operating leverage as well. And again, I think the earnings estimates, if one assumes the 22 to 25% revenue growth, should reflect very, very positively on the bottom line. So I think it's a clear hold from my side, and the investor has a couple of years' time on it.
Oh, right. Thanks for that. There has been a growing view, and that's also Credit Suisse view since you spoke to Sakti Siva, that NBFCs need not lose out in a rising rate syndrome, because now banks are also locked into this MCLR, marginal credit lending regime.
For a year.
So anyway, the higher cost of money will have to be passed on.
Correct.
So there is not that they're not losing out to banking competition as they would have at an earlier time. That's at least Credit Suisse's view. For whatever reason today, NBFCs did well, private banks did badly, PSUs continue to do badly. Okay, with that, let's get to someone who has a question on a bank. Anand Upadhyay is calling us from Uttar Pradesh with a Yes Bank question. Anand, please go ahead.
Yes, ma'am. Thank you for this call. Ma'am, I am having 50 shares of Yes Bank bought at a rate of 315.
Okay.
But what next we will do with this? Because these days nearly all bank is not doing well. What I am thinking.
Do you need the money? Do you want to book out profit, or you just want to know whether you are in the right share or whether you should move out?
My views are mostly long term.
Long term. Okay. Mayuresh?
So, Lata, I think with all the problems that the bank undergone, specifically related to the divergence for the RBI reported numbers, along with what we probably saw in terms of elevated GNPAs, elevated credit costs, I think the bank is having a course correction done. The second element in terms of their CASA actually having a very strong accretion over the last few quarters is very, very evident, both in terms of the strong CASA growth that we've probably witnessed. And again, a large element in terms of the provisioning going up, that should normalize, which basically means that the credit costs should probably plateau out over the next quarter or so. Having said that, my own sense in terms of the advances growth, both in terms of the retail side of lending, should grow at a very fast compounded pace, and that itself should give it the accretion in terms of an earnings perspective. So if the investor has an horizon of more than a year, which he has, my own sense is that he can hold on. Yes, there are issues surrounding the banking sector at this point of time. The new RBI regulations will have elevated NPA provisioning, but that largely has been factored into the price, in my opinion. So yes, hold on to the stock, and I think the stock can do pretty well over the next 1.5 to 2 years.
Okay, the answer is yes.
Okay, we have a question on an NBFC now. Raj has 1,000 shares of DHFL, which he bought at an average price of 450 rupees. He wants to know if it is a good time to hold this particular stock, DHFL, or should he switch into another name? He can hold on to the stock for the next 5 years.
Oh.
Okay, so that's a long runway that we're talking about. Mayuresh, what would you tell him?
So I have been positive on this stock. I have been positive, both in the sense that the kind of raising that they've done, the capital adequacy remains extremely strong. They're also extremely well placed in terms of a very strong advanced growth. The third element in terms of them maintaining their NIMs is more or less there, because the kind of varied borrowing mix that they have probably helps them mitigate the risks from rising yields. And the fourth element, obviously, in terms of asset quality, the asset quality has remained extremely stable. And my own expectations is that the stability in terms of reported asset quality numbers should very well continue. So even on an adjusted price or a price to book parameter, the bank looks pretty well poised, or the NBFC looks pretty well poised to probably leverage its book pretty well. So yes, I think it's a clear hold from my side. 5 years, pretty long period, but yes, at least for the next 1.5 to 2 years, the hold can continue from the investor's perspective.
Mayuresh and Mitesh, thank you very much for joining us and answering questions of our viewers. We have to wrap up this edition of Markets Today. On that note, thank you very much for watching.